financial center multinationals, and 232 to 232 ChatGPT said U.S. Secretary of Defense Pete Hegseth is in Japan. He is essentially the American defense minister sent by President Trump himself. Pete Hegseth's task is clear: prepare for war with China. In recent news, in a tit-for-tat move, China has raised tariffs on U.S. goods to 125%. Donald Trump has stated that he is open to talks with Chinese President Xi Jinping after imposing an even higher tariff of 125% on China. Investors and markets are trying to process U.S. President Donald Trump's decision to suspend some tariffs while escalating a trade war with China. Investors and governments around the world have long regarded U.S. treasuries as the safest haven. So much so that many countries have chosen U.S. debt securities as a way to utilize their foreign exchange reserves or protect their trade surpluses. But this also means that the U.S. economy is becoming increasingly dependent on external financing. So, which countries hold the most U.S. debt? What are the dynamics of this relationship? And what are the implications for the global economy? Let's take a look. U.S. Treasury bonds have been described as reference or risk-free by investors and central banks around the world. This is rooted in the Bretton Woods system, which was built in the aftermath of World War II, and the dollar's position as the global reserve currency, as well as the perceived reliability of the U.S. economy. However, in recent years, rising protectionism, trade wars, geopolitical tensions, and economic uncertainties have occasionally shaken this perception of credibility. In particular, major creditors such as China and Japan are fueling discussions about what might happen if they start to reduce their holdings of U.S. bonds. For decades, the U.S. has relied on both domestic savings and the appetite of foreign buyers to finance its budget deficits. The total stock of U.S. Treasury debt publicly held obligations of the federal government is expected to exceed $33 trillion by early 2025. The portion of this held by foreigners is also quite large, approximately $7.5 trillion, ranging between $7.3 trillion and $7.7 trillion in some more recent sources. The largest share of this foreign ownership is held by East Asian countries and some European financial centers. Japan and China have long held the top two spots, although the rankings have shifted slightly over time. They are followed by financial centers such as the United Kingdom, Luxembourg, and Ireland. In smaller shares, Switzerland, the Cayman Islands, Belgium, India, Saudi Arabia, and others also hold U.S. debt. Now, before moving on to the detailed numerical tables, it is important to note that these data are approximate and based on major foreign holders of Treasury securities as reported regularly by the U.S. Treasury Department. Japan, approximately $1.9 trillion. Japan has been the largest buyer of U.S. bonds for many years. Japanese investors have shown strong demand for U.S. bonds, viewing them as safe in a low-interest rate environment. As of early 2025, the value of U.S. Treasury securities held by Japan stands at $109 trillion. This figure can periodically rise above $115 trillion. The large pool of savings, the yen carry trade, and the Bank of Japan's monetary policies all contribute to this trend. The strategic partnership between the U.S. and Japan also helps stabilize this situation. China, approximately $870 billion to $1 trillion. China is usually in a race with Japan for the top spot, but in recent years, the amount of U.S. bonds held by China has fluctuated. The portfolio, which once approached $1.3 trillion, has decreased due to trade wars and reserve diversification steps. Data for 2025 suggest a bond stock between $870 billion and $1 trillion. China invested its export surplus in U.S. bonds, keeping its currency stable and providing significant financing to the U.S. But in the so-called commercial atomic bomb scenario, Beijing could sell these bonds in the event of a conflict, putting Washington in a difficult position. Still, it's a dangerous weapon that could also harm China. United Kingdom, about $650 billion. The UK is a major hub for global funds and banks. Financial institutions in the City of London hold U.S. bonds from various countries or their own portfolios. As of early 2025, the UK holds around $650 billion in U.S. bonds. It's difficult to distinguish exactly how much of this belongs to domestic institutions versus offshore funds, but the United Kingdom consistently ranks among the top 5 largest creditors. Luxembourg, approximately $330 billion. Luxembourg is a small country in the EU, but a giant financial center. Multinationals and international funds conduct business through Luxembourg to benefit from its tax and regulatory advantages. Luxembourg is therefore surprisingly high in the ranking of U.S. bonds. According to 2025 data, it is on the list with a portfolio of around $330 billion. This is significant for its own economy, though these are assets of international funds. Ireland, another European financial center, holds a notable portion of U.S. bonds, with a value of approximately $320 billion in early 2025. The European base for many multinational companies is located in Ireland, which is why the total amount of escrow bonds accredited there reaches this level. This is also connected to giant technology companies like Apple and Google channeling funds through Ireland. Belgium, with holdings of around $270 billion, is another notable country on the list. Belgium's financial holdings include U.S. bonds, primarily from the European Union institutions, the European Commission, international banks, and multinational companies. Switzerland, known for its global banking reputation, holds around $250 billion in U.S. bonds. It is a center for financial giants, private banks, and funds that invest in U.S. debt. The Cayman Islands, one of the emblematic centers of offshore finance, has around $240 billion in U.S. bonds. Various funds and hedge management companies are involved, with the official records attributing this amount to the Cayman Islands, even though the real owners might be located elsewhere. Taiwan, an important economic and geopolitical partner of the United States, has a portfolio of about $220 billion in U.S. bonds. Taiwan's central bank and insurance funds have bought U.S. bonds in large quantities to utilize its trade surplus. India, with a rapidly growing economy, holds around $210 billion in U.S. bonds. As part of its efforts to diversify reserves, India has turned to U.S. bonds. Other countries like Brazil, Saudi Arabia, France, Germany, Singapore, and others hold U.S. bond stocks in the $100 to $120 billion range. These figures fluctuate periodically, and countries like Mexico or Israel occasionally move up the list. The overall picture is that Asian and European financial centers, as well as Middle Eastern oil producers, are the largest external creditors of the United States. Around $7.5 trillion of the total U.S. external debt is held by these actors, while the rest is held by institutions within the U.S., individual investors, and public institutions like the Social Security Fund. The key point here is that the ability of the U.S. to sustain this level of borrowing at low interest rates is linked to the dollar's status as the reserve currency. Billions of dollars in global transactions flow into U.S. bonds daily as a safe haven, providing cheap financing for the U.S. Treasury. However, if major bondholders, especially China or Japan, start to reduce their portfolios, U.S. interest rates could rise, the budget balance could deteriorate, and the economy could slow down. This is why the analogy of a trade atomic bomb is used. If trade wars escalate, giants like Beijing could use the bond card to destabilize U.S. finances. Despite the potential risks, it is unlikely that countries like China or Japan would fully engage in large-scale selling, as such actions would lead to losses on their remaining assets if bond prices fall. Furthermore, a shrinking U.S. market and a depreciating dollar could negatively impact their exports. Nevertheless, even partial selling, enough to influence prices, can create fear. This fear could force the U.S. to make political concessions or adopt a softer negotiating stance. This uncertainty is a significant stress point in global finance. For example, every time U.S.-China trade tensions rise, the question of whether China will sell its bonds creates turmoil in the stock markets. Looking at the countries to which the U.S. owes money, Japan and China come first, followed by the United Kingdom, Luxembourg, Ireland, Belgium, Switzerland, the Cayman Islands, and Taiwan.